Investors and traders, welcome to the channel Market Chart Pattern. Today is 20th of March 2025. Hope everyone is having a great day. So we will take a look at the key markets for the United States market. So that will be mainly the US stock indices and bond, dollar, gold. But before we start that, in this video we'll also cover some of the world markets, and as always this video is for educational purposes only and it is not a financial advice. So excuse me, what we are taking a look at is the daily chart of the Hang Seng Index. This is the Hong Kong market. It is fairly widely traded as well. And some of the stocks such as Alibaba, they are also listed on the Hang Seng Index. So what we can see is that this index actually completed the 1.272 expansion of this entire range, which is pretty much like a double bottom, and then it's just been moving in this fashion higher, and then it's completed this ABCD, this one right here. I took this low because it appears it's still part of this corrective move right here, and then we had a very strong move to the upside from here. So we have that, and then if we just go back and take this important high and try to see what sort of retracement do we get. Just by eyeballing, I think we are at the 61.8% retracement. So there we go. That is a pretty strong resistance level, and we are seeing this market actually trade lower from here. So it's one of the other markets that which is here we go. So this is 61.8% retracement. So this market is also coming under pressure. So this is one of the things I wanted to bring to you to your attention. However, if it begins to close above this and good closing basis, then it's going to 27,755. But by the looks of it, the number of confluence of Fibonacci ratios and expansions coming around here with this smaller ABCD looks like a pretty strong resistance level. And what we could actually perhaps, if the market symmetry is to play, we could get a pullback which could be significant as much as this one, and then we'll have like a channel formation right here. So something like this is possible, and then from here, if it begins to break this trend line 200-day moving average, then that's further bearish. Now if we take a look at the Indian market, which is the S&P BSE Sensex index, I believe we have never taken a look at this index, but the Indian market has been pretty hot, just not for the local investors but also for the international investors as well. And since COVID, this market has pretty much doubled actually. And what I see is that you can see this market put in a top back in September of 2024, so it's been a while. And then what we also see is this market actually has made a perfect ABCD. So these patterns that I talk about, they are not just present in the US market or the European markets. These anything which has got liquidity and is moving, it is present there. And then also what we see is I'm going to show you, it's right at the 38.2% retracement as well of a key low, and we get a really strong support, and we have seen a pretty nice rally to the upside. It looks more of a short covering rally just by the looks of it, but the really important key level will be around here, 77,770. if it's able to get above that on good closing basis, and I would like to see ideally two closing days, then I think we might have seen a low. Otherwise, the chances are that it might actually be a prolonged bear market and just might be an ABCD to the downside. That possibility remains there. And if we were to just take a look at some of the previous pullbacks, so this is going back to the October of 2021. The market pulled back about 18%, and thus far it has pulled back about 15.5%. But this level of where the 38.2% retracement is, which is coming off these lows back in June of 2022, it's a pretty important low, pretty important point because of the 38.2% retracement. So let's see what the future will bring us. Now, if we move over to Europe and take a look at the take a look at the FTSE 100, this is the daily chart. On the FTSE 100, we can see it appears to me that it is a head and shoulders pattern, because you can see this market expanded to 1.272, then it has had a nice pullback, double bottom formation here, 38.2% retracement, 1.272 expansion of this, had a number of things going on, nice rally right to the 61.8% retracement, and this is where it closed. It closed pretty much unchanged, or a doji formation. So I think there's pretty nice symmetry between the left shoulder and the right shoulder. Looks like it is inward a head and shoulder pattern. To me, getting below this trend line, I think opens up further. Maybe it pulls back right to 200-day moving average. Below that, I think we could say that maybe we are beginning to see the change in trend. And this market actually has hit our level as well on the weekly chart. I actually have drawn it on the daily chart, so let me go back. And here we go. So we have these big level around here, 88.13. So market actually reached that level, and then it's just unable to close above on this unsustained basis. And then if we take a look at the the German DAX, there we go. So the German DAX, here we have this ABCD, which is the 1.618 times the AB leg. The CD leg is 1.618 times. It completed right here, and then what the market has done is it's like a wedge formation, but it's actually a 3 drives to a top pattern right here, which is very similar to a wedge formation in this case. And then we are seeing possibly a double top formation right here. So 6th of March, and the market tested on 18th of March. It's not able to close above it. In fact, it closed below yesterday's low. Right at the 20-day moving average. So yeah, it's beginning to look a bearish kind of a move, and getting below this 22,200. It's gonna be, I think it's gonna open further selling in the German DAX. So there we go. That's what we are looking at. And then if we take a look at Nikkei, which is the Japanese stock market, and then we can see that this market, much like the market in India, also topped last year, 11th of July, in fact. And then this is where we have this ABCD move, but in this case the CD leg is 1.618 times. Just like yes, I believe we had this move in S&P 500 was the same. The CD leg was 1.618 times. And then the market just rallied to the 78.6%, whereas the US markets have gone much higher, but it's not able to take out the 78.6% retracement. It seems to be forming a rounded top right here, and seems to be rolling over. So this is another one of the Asian markets, in addition to the market in India, which seems to have put in a top last year, and then it's just kind of making a retracement. Okay, so now let's move to the markets in the United States. So let's start by taking a look at the dollar index. So here we go. This is the dollar index daily chart. Here we can see that the dollar has had a nice pullback after completing this pattern, and we were thinking that might find support from here around 103 level, but it has gone a little bit below actually. So it is between the 61.8% and 78.6% retracement levels, and it's gone a little bit lower than where I would have thought that there was good support, but still in a zone where we can see some strength, and this is what we are seeing. It's trying to rally, but then it gets sold off. And if we take a look at this on the weekly chart, here we go. So you can see that's clearly below the 61.8% retracement, and this is the market symmetry, and it has actually also gone below the symmetry. So it's telling me perhaps things are changing a little bit in the dollar. The kind of strength that we had seen in the past If it just begins to get below this 1 or 2, I think we're gonna get down to 99 level. Getting below 99 is pretty bearish for the dollar index actually. Now let's take a look at the interest rate market. So we start by taking a look at the shorter end of the curve, which is the 2-year Treasury note, and you can see that the 2-year Treasury note, it had a bit of a rally. The rally is almost equal to the previous rally it had, so market symmetry concept is in play, and this is also the point we had pointed out that it could go up to 4.07% because of the 38.2% retracement, and thus far it's just not able to break above it. So I think we can draw a trend line like this, or in fact I can take the body like this, and let's see, maybe there is also a channel formation right here. Yep, I think it's also moving in this parallel channel. So the yield seems to be moving to the downside on the shorter end of the curve. And then if we take a look at the TNX, you can see that the TNX is doing something a little bit different. I think the yields rose today, so that's kind of a so that's very interesting, because we have the shorter end being lower, and the on the kind of the medium part of the curve, it's just gone up a little bit. But the chances are, if you can see that maybe the yields want to go and reach 4.06 or maybe 4% level. This is the way it looks like it. Obviously in this structure, because the double bottom, we have seen a rally. Thus far this rally is equal to the previous rally, so the market symmetry concept is still valid. And unless the character of the market begins to change by getting above this swing point, the chances are this market wants to move a little bit lower. So 4% is something it could target on the yields. And if you were to flip it and take a look at it on the futures chart, this is the 10-year futures, and here we can see that the market is actually trying to rally or push the yields down, but we have got a fair amount of resistance right here. It needs to get above this resistance level to move higher, but it's also not breaking down either, so that's a interesting thing to take a look at. I think whenever it tries to get to the bottom end of the range, then it gets bought up, and then it's right towards the top of the range. So yeah, in some time I think it's just gonna break out on the either side, but the momentum seems to prefer to the upside. Now if we take a look at the long bond futures, here we go. Long bond futures are doing something similar, but they are more interest rate sensitive because of the longer duration. So they are actually finding quite a bit of resistance right here. Getting above these 119, 120 would be pretty good for the interest rates to get pushed down. But thus far we can see that it's just kind of stuck in this trading range. Big move up, big move down. So a lot of movement after the Fed meeting yesterday in the interest rate markets. One of the comments which Fed actually the chairman Jay Powell made was really interesting, because he said that the impact from tariffs might be transitional only. So it'll just come and then go away, so transitory. But he had made similar comments about inflation as well, but it turned out to be much more sticky back in 2021, for example. And so really interesting to see how these markets will gauge the data and the Fed's comment in the next few trading days. And then we have a key date coming up on 21st of March, which is Friday tomorrow. And then I think in the early part of next week, Monday and Tuesday, it's going to be really important for all these markets, but the stock market in particular. And I'll just get to that in a little bit. So let's take a look at the gold market, because where the gold market is, it's doing something really interesting. And so we had this nice pattern right here, where we had a number of a confluence of Fibonacci expansions were coming together, and also the pattern where the CD leg was 1.618 times, and then we saw the market actually correct to about 4.3%. And now the market has actually gone up a little bit. It's a 1.618 expansion of this move right here. So what we are looking at is a wedge pattern formation like this, a potential 3 drives to a top formation. So around here there is some resistance, and the market actually just closed a little bit lower, but intraday there was a fair amount of pressure on the market. So it's possible the market might begin to consolidate here for some time, just the way it did here right here, and then we could get another maybe 4% move to the downside, maybe towards the channel, bottom end of this channel, and getting below this channel, I think in this case could actually open up doors for further selling in gold, which is going to be really interesting because gold in a super trend to the upside. But right here right now, I think these are some really critical level on the daily chart. Then if we take a look at the silver futures, you can see that they are not performing as well as gold. Gold is making new all-time highs. The silver has not been able to make its a new all-time high. I think back in 2011, $50 was the high it reached. I think silver has done that one time before as well. I can't remember exactly when, but a long time ago. So you can see the difference between gold and silver. It's just kind of stuck in here in this range. Now let's move to the stock indices in the US market. Before that, we take a look at our timing model. And that's on the weekly chart, so I'm going to move to the weekly chart right here. So we have this model that we have been following, and we have got a key date that comes up on the 31st of March. Because of weekly chart, we have to give 2 weeks on either side, so because of that we are already in that timing zone. And last Friday was when we saw something really interesting happen in the stock market. This is the S&P 500 cash. Let me move down to the daily chart. Here we go. So this was last Thursday, 13th of March, and this was 13th of January. So we actually hit a really key level, which is the 61.8% retracement of the 5th of August 2024 lows. And then what we have seen is a rally to the upside. So really interesting is that this is where exactly some of the other indices, as pointed out in the video before, were also hitting 61.8% retracement or some other major retracement with a pattern formation in some cases. So the markets like to bottom in unison, and we have seen some sort of a bottom come in, and then what we are looking at is a rally, and this rally seems to be pretty weak right now. So let me actually try to see how far away are we from the 38.2% retracement, and we haven't even reached the 38.2% retracement. That's pretty weak price action thus far, and still remains below the 200-day moving average as well. So what is really important for the market is, if there is a pretty, it needs to show further signs of strength, and then try to get above the 38.2% retracement. Now, one of the things is that for how many days the market has been trying to rally after putting in this bottom right here. So see 1, 2, 3, 4, 5. So it's been a 5-day rally, and this day being actually a down day. So it looks like maybe it can do something similar for another 5 days, maybe a little bit longer. And I think the longer it takes to kind of consolidate right here will be pretty good, much better for the bulls, because it means that the market might be actually consolidating and taking its time. I think it could do that for 16 days. So we are done 5 days. We've got a number of, so a couple of weeks, maybe a little bit, 2.5 weeks. It could just remain in a choppy fashion as well, and consolidating right here. And then if that's all that we get and we begin to break below these lows, then we are looking at an ABC to the downside, which is not going to be good at all for the bulls, and that's going to be a bear market move. We have seen this 10% correction pretty quick fashion. So this is what is really key, is this 13th of March 2025 lows. It needs to hold for any sort of case for the for the bulls. Now if we just take a look at this on the NDX, which is the S&P 500 cash, one of the things that we were following was a model that if the S&P 5 excuse me the NASDAQ 100 closes below the 200-day moving average in a long time, so for example in a year or so, and then for the first time, I mean in a long time, and in the next 10 trading days the market closes below 4%, or basically the corrective move is greater than 4%, then we have seen a bigger move to the downside take place. And now that did transpire, and this is the first time we are doing this in a live environment, because back testing of past data in hindsight is easier. When we do things live, it's always more challenging, but this is what we like to do on the channel. We try to forecast things in advance before they happen, and we have been pretty lucky to get a lot of the moves really spot on, in fact. And yeah, we missed few things as well. But this is what I try to do: come here and do these things and provide all this information. And everything is archived on the YouTube. I do not delete any video. You can have a scroll through the archive and see it for yourself and judge it for yourself. So here what we are looking at is again a rally. I think it can go it can actually go a little bit consolidate here further, and I think the longer it takes the time, maybe might be better, because it means more consolidation is taking place. But again, this 13th of March low is really important. I think if once we break this low, and then it can move down quite a bit. And starting from tomorrow, we have got key timing aspects coming in as well. So Friday, then Monday, Tuesday are really key important dates. So we need to be watching the markets really vigilantly. The market should get to above to about 38.2% retracement, but if it's not even able to make it there, then there is quite a lot of weakness in the market. I mean, thus far this bounce doesn't look that great. Right here, when this low was formed, it was a pretty strong move to the upside, then a retracement, and then up she went. Right here, what we are seeing is just some choppiness. Looks like maybe a consolidation, but this low of 13th of March is really important. Came right at the 61.8% retracement. Now quickly I will just go through some of the other indices, such as Russell 2000. And here we can see that this one has been one of the hardest hit one, because it went down about 19%, and it has rallied a little bit from the 13th of March right to the 38.2% retracement, not even fully reaching that. So we have to watch this level really carefully. If the small caps begin to get above this, then that's a sign of good strength coming into the market as well. So it could be taken in a slightly positive way. And then let's take a look at the Dow Jones Industrial. Again, it has held the 13th of March low, so that's good. And I think the Dow is doing well. There you go. It's also right at the 38.2% retracement. It's also finding some resistance from its 20-day moving average right here. Maybe it just goes in choppiness. As long as it doesn't take this lows out, I think consolidation right here is not a bad thing. And then getting above the 38.2% retracement, that's where I think things will begin to look pretty on the bullish side. Getting below this, we are looking at A, B, C, D. That's not going to be that good for the bulls at all. Now, last but not least, let's take a look at the NYA, which is New York Stock Exchange Composite Index. It does have the ADRs as well. Nice rally right in the 20-day moving average, and I think it's finding some resistance right here. And if we take a look at FXI, which is the China's iShare ETF, and here we go. So this market is very similar to what we see in the Hang Seng. You can see big 1, 2, 3. So I think with this kind of a gap down, this I think is finding some sellers perhaps are coming in this, and we'll have to watch this space really, really carefully. So thank you very much for watching the video. Just one request: I put the donation link in the description. If you want to donate something to the channel, it will be highly appreciated. It'll just help me cover some of the costs, such as subscription for the trading view. And thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.